Yeah. Good morning, everyone. Yesterday, US market also remained sideways for the whole day and ended more of a flattish note. Today morning, US market are a bit on a downside. In fact, yesterday US GDP figure came, but that is more of a revision figure. It's not of so important, which declined by 1.6%. The previous estimate of the same figure was at around 1.5%, which came 1 month back. So as such, the figure was not having any impact on the overall market, as it was already known. Today morning, Asian markets are showing mixed trend, whereas China and Hong Kong market are positive, but the other markets are negative. China today morning has reported PMI figure, manufacturing PMI, which came positive for manufacturing PMI, and for non-manufacturing or service PMI, it was way ahead of the expectation of the market. So composite PMI came well ahead of the expectations. Last month it was below 50 at 49.6, and this month it has come at 50.2. So anything above 50 indicate that there is a growth. So reacting to that, Chinese markets are positive. But on the commodity side, we are seeing some softness across the board, wherein oil is down by around $1, aluminum is down by around 1%, copper flat, iron ore is down by around 0.5%, and steel is down by around 0.5%. I'll request technical team to take up from here.
Yeah, good morning, all of you. Yesterday we see the volatile session in market. Nifty open a gap down and again recover last half an hour Nifty again fall towards 15,750, 760 level. But we see that Nifty trading range, that range is 15,700 at downside and upside 15,940 is a immediate resistance facing Nifty. If Nifty break that level, then we expect further rally towards 16,000 and above range. In next series, we expect the positive momentum towards 16,170 and 16,400 in upside, and downside major support place around 15,700, 15,600. Today expiry we expect around 15,800, 848, 900 in upside. So we remain positive in today's session. Bank Nifty trading below the important support zone, that is 33,500 and 400. So if Bank Nifty break the 33,400 in upside, then we expect further momentum towards 33,700, 34,000 in an upside. Immediate support place in Bank Nifty at downside around 33,000 first and 32,700 at downside. So if Bank Nifty today's close above and break above important resistance level 33,400, then we expect momentum in today's session towards expiry around 33,600, 33,700 in upside. Nifty Finance also trading near the support zone, that is around 15,100 and 15,080 at downside. We expect upside immediate resistance towards 15,200 to 30 in upside. If Nifty Finance break this level, then we expect a further rally towards 15,300. Stock specific, ITC looks positive at current level, and LNT also looks positive at current level. We expect LNT trading towards 1600 and 1620 in upside. Support place around 1510 at downside. Second, Godrej property also looks positive, but it is a conditional call. With Godrej property break 1230 level and upside, then we expect further rally towards 1320, 1340. Right now trading 1211 at current level. So and downside support place around 1170 at downside. Reliance Industry also looks positive. We already given call in Reliance Industry. If Reliance Industry any retrace towards 25, 40, 25, 30 at downside, so we expect again bounce back at that level. We expect upside 26, 30, so 26, 40 in the Reliance Industry. That's it for technical. Derivative I can give.
Yeah, thank you, guys. Good morning, everyone. So, as per derivatives data, we are seeing there's not much of change from the OI position wise. Currently, as I mentioned, that Nifty is in the range of 15,600 to 15,900 level. So, once if Nifty goes above 15,950 level on the above basis, then only we might witness the position to get shifted upward toward 16,200 to 16,300 level. Currently, we are seeing at 16,000 level of strong OI positions, call writer positions are getting added up. While in yesterday trading session, also we have seen almost 2.2 million positions got added up of call writer around 16,000 level. While on the downside at 15,600 and 700 level, put writer positions are getting added up strongly. So we are seeing that there is not much of change in Nifty is likely to remain range bound there till there is a further breakout for the trend momentum. Currently, we are seeing the PCROI is India VIX is continuously trading around 21 levels. As I mentioned, that there is a breakdown level of India VIX at 18.5 level, and PCROI once PCROI also goes above 1.15 level, then only we might see some positive momentum in the market. While in today's trading session, if PCR goes below 0.97 level, then we might witness a sell-off again in the market. Currently, there is a range-bound session, and for intraday basis, we are expecting once if in today's session Nifty goes above 15,850 level, then long positions can be created for the level of 15,920 to 950 level. While on the downside, we are seeing the support at 15,740 to 15,700 level as per the OI positions. Currently, as per stock specific and sector specific, we are seeing that the auto counter and metal counter are holding strongly in last previous two trading session. So from that selective, we are expecting Ashok Leyland, Hindalco to hold a strong momentum in the market. While we are seeing that Ashok Leyland is continuously positions are getting added up at near 140 to 150 strikes in the next series also. So currently Ashok Leyland and Hindalco looks positive for next 1 to 2 trading session. That's it from the derivative front. Thank you.
Good morning. LIC has sought more time for determining the embedded value for the year ended FY22, and it has said that it will disclose it by 15th of July. Sundaram Fasteners is planning to invest 100 crores in its defense business over the next 2 years. Company also said that domestic automobile sector should grow in double digits across all segments in this financial year after 2 years of sluggish growth. So this is positive for Sundaram Fasteners. Thank you.
Good morning, everyone. Dr. Reddy has announced that the US court has dismissed all the claims and counterclaims in Indivior, that is a Suboxone case, and the counterclaims by Indivior. So this is positive because Dr. Reddy has already announced that they have settled for Suboxone with the Indivior. So now there is nothing litigation, no litigation is pending. So marginal positive for Dr. Reddy. Thank you.
Good morning, everyone. SIS has approved buyback of rupees 80 crore at a price of 550 per share through tender offer. The current market price for the company stands at around 455. This is neutral to the company. Thank you.
Tomorrow, auto numbers will be coming, and quite possible that the CV number will show up very well. We had seen that last 2 months also, or even in the previous months also, CV numbers continue to remain very positive. So in that, what we see that automotive axle, which is mainly catering to CV, looks attractive. If we see that the volume growth in CV is expected anywhere between 25 to 30% for the current year. And we had seen that the automotive Excel has outperformed the industry in the previous year, and expect that current year also they will be able to outperform the industry. Automotive Excel is owned by Marriott, which is one of the largest auto ancillary company of the world, and also by the Bharat Forge Group, that is Baba Kalyani Group. So they both owned almost around 74% of their company's shareholding, and rest is with the public. But we see that the increasing volume will be able to support the prices and the performance in the coming year. And even with the growth of this CV percentage of around anywhere between 25 to 30%, they will still be short of the peak of the cycle. So somewhere the CV sales in the industry is likely to increase to around 380,000 in the current year, which will be short of CY28 peak sales of around 470,000 or so. And as such, the expectation is that even in the next year, that is FY24, there will be growth of anywhere between 18 to 20% in the volume. So the consistent growth in the volume can support the prices of all the CV company. Automotive Excel is comparatively better price as compared to other player, mainly on account if we see on the valuation side, this share is somewhere trading at around 14 times FY24 earning, whereas if we see the other comparable company, that is Jamna Auto, which is also purely focused on CV, is trading somewhere at around 20 times. So there is a valuation gap which is available for the automotive Excels, and automotive Excels capacity utilization is somewhere at around 70-75%. So they have a room for growth in the next 2 years, and we see that the stock can do well in the coming period. So outlook seems positive for automotive Excel. Apart from that, about the Reliance industry, which what we had seen that yesterday also, most of the stocks were down, but Reliance was supporting the market during the day. This is mainly happening because of the 2-3 reasons. One is that the refining margins, Singapore refining margins are running very high. Average refining margins in the previous period was somewhere around $5 to $10 for the Singapore refinery, Singapore refining margin. But currently, the Singapore refining margin itself is somewhere trading at around $35. So that is supporting the prices of all the adding up to the profitability of most of the oil refinery company, and specifically Reliance as well. Reliance has been seen that they are importing a lot of crude from Russia, which is also supporting their profitability addition to the higher refining margins. So quite possible Q1 results of the Reliance on the O2C side will be very strong. Though petchem prices like PVC and all prices has corrected in this quarter. PVC prices, which was at around $1,450 towards the end of the March, is now at around $1,260. So that may have some negative impact, but the gain on the refining side will be much larger. But if you see the overall composition of valuation of Reliance, the major gain comes from retail. Almost around 40% of the valuations of the Reliance is coming from retail, and then somewhere around 30% comes from the telecom, and 25% comes from the O2C business. So the contribution of O2C in total valuation has reduced substantially. Even if we see the retail side business also, that should also do comparatively better. Because of if we see the spend on the credit card, which was published by the RBI, the spend has consistently increased in April and May, and quite possible in June also. So quite possible that the retail business also in this quarter should do well. So of the three, retail is likely to do well, oil to gas is likely to do extremely well, and then telecom is likely to remain flattish. So overall result for the Q2 is likely to be very positive for the Reliance industry, and as such the prices are supportive. Only concern is that since this refining margins has moved up to a very high level, so there is always a possibility of this correcting, and in the correcting environment, this may not be. We may see some pressure on the Reliance prices. So one need to remain watchful. But overall results is likely to be good, and outlook for a bit longer term, that is for a year and all, is also positive, as somewhere towards the end of the year, current calendar year, maybe near to the Diwali, we may see price revision in telecom as well, so which will have a bigger positive impact on telecom as well. So overall outlook seems positive for the Reliance industry. So that's all from us. Thank you very much, and have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.